We know the metal markets have been on fire, with copper, for example, trading at record highs, and gold, the same thing. Look at gold right now, the spot price hitting new highs above $4,600. Part of this is disenchantment among some investors with U.S. institutions as the Trump administration steps up pressure on the Fed boss, Jay Powell. Let's get more from David McAlvany, Portfolio Manager and CEO at McAlvany Financial Companies. David, thanks very much indeed. Start off with gold. Do you see more upside here?
We do. I think this is once in a generation. We don't often see monetary regime change. And the central banks have been front running this with their reserve management programs, increasing gold allocations for the first time in 3 decades. We've got a greater quantity of ounces and the value associated with them amongst the central bank community than U.S. Treasuries. So de-dollarization, I think, is a macro and structural issue which continues to play out. And, to a large degree, we really haven't seen investors look at this as an asset that they want to allocate significantly to. It's not utilized as a safe haven yet. And I think a part of that is because the equity markets and the bond markets have behaved in a fairly civil way to date. So no motivation to move out of tech and AI and many of the themes that have been winners for several years now. So I think as we see a move from investors, you do have another leg higher. And we think we are still early days in this bull market.
What about silver? Are you in the case that silver may offer even more promise because of its industrial use? Certainly it has been outpacing gold.
Yeah, I think this is also a very unique setup, a 5-year-old supply deficit, catalyzing a very rare price adjustment. And, the first stop is 100. I think we see significantly higher prices beyond that, 230 to 250 over a 3-year time frame. And it is a combination of investor demand and industrial demand. It's one of the things that gold does not benefit from, which is a significant industrial use. Certainly, you've got jewelry demand on the gold side. But for industrial demand, solar has been very significant. The Samsung solid-state batteries, which are going to be online within 12 to 18 months in replacing the old technology in electric vehicles, requires a kilo of silver per battery. That, I think, is going to be another compelling demand source. And so I think we are looking at $50 an ounce, basically having been a threshold for 50 years, and we're breaking out into a new price regime. This is a generational repricing, and again, it's being driven by a combination of industrial demand and investor demand as well.
What about copper? What is it? Simply just mine disruptions and data center build out, yada yada, that's been lifting copper?
Yeah, I think that certainly is a part of it. We see to meet the kind of industrial usage, or should I say the electrification goals, we would have to increase mine production by 5 times, which is not particularly realistic when you look at the producers today. If they can increase production by a marginal 5 to 15%, that's a best case scenario. We need a 500% increase in mine production to meet the EV goals, say by 2030. So, we are in this unique period of time where politics is driving electrification, a move away from fossil fuels. And it's just not. We've got mines that have been underinvested in for decades, and they don't have the capacity. So just like silver, running in a supply deficit, not a surprise that we see it at all-time highs, with more demand still in line, so to say.
I'm just wondering, SIL is one ETF for playing silver. It's the Global X Silver Miners ETF. Wheaton Precious, apparently the biggest holding, latest I've seen. Is that a reasonable way to play silver?
Yeah, I think it's a very reasonable way, in part because you're dealing with so few primary silver producers in the world. Mostly silver is a byproduct. So byproduct of a copper miner, byproduct of a gold miner, byproduct of a zinc, or, so you can't throttle production the way that you could with other mines, gold mines in particular come to mind. So yeah, I think SIL gives you good broad diversification across all names, and it's a mix of the heavy hitters like Wheaton, an incredible business model, along with some of the producers, and so yeah, I think if we assume $150, $200 silver prices, these are companies that are making. It's an embarrassment of riches, frankly.
Yeah, it's a really incredible. Wheaton is the big, Wheaton Precious Metals biggest holding at about 22%, and then Pan American Silver at about 12%. David, always
Yeah.
great to hear from you. Thank you very much.
Happy to be with you again.
David McAlvany, Portfolio Manager and CEO at McAlvany Financial Companies.